Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. Welcome to another weekly watch list video where we'll go over everything that you need to know for the week ahead. Before we get into it, please hit that thumbs up for the video. And if you are new, consider subscribing to the channel. So we're going to start right here with the earnings for the week. Earnings season starts up in a couple of weeks from now with the banking stocks. So these are the stocks that have yet to report for the last quarter, but it's almost over with. And then we start right back up with a fresh earnings season. I know it always feels like there's so many earnings and it always feels like it's earnings season, but it doesn't really start until those banks report. And that is, I believe, in about 2 weeks from now. All right, so that's the earnings there. Okay, going over to our sectors and how they performed on the week and how they're performing so far this year. We have seen technology, communication services, and consumer cyclicals trading just like they were in 2021. And all of those defensives are also trading like it's 2021. All right. All these defensives, they were very good in 2022, but in 2023, they are not doing well. And technology has been totally crushing it and outperforming the rest of the market. How long is that going to last? Not really too sure, but it has been because those yields have been going down. All right. And there's still growth to be found in technology, where if you are thinking a recession is coming, the only things that will actually produce earnings growth are those high growth stocks, which are in the technology industry. So, we're starting to see that rotation from those value stocks towards the growth stocks, pretty much predicting a recession is coming. When? Who knows? Market timing is very difficult. So anyway, that's the sectors. Going over to our economic calendar now, let's look back at last week. So last week we had Powell and we had the FOMC rate decision. They decided to raise rates again for the 9th straight time. They went up 25 basis points. All of that was basically built up into the market. And, we saw the market react to it. All right. Initially, it went down and then started to climb back on Thursday and Friday, but a very choppy market, right? The market to me seems like it doesn't know what it wants to do. So anyway, that was last week on the economic calendar. Looking forward to this week, we have a lot of Fed governors speaking just about every day. Now, this is normal. This is what happens after the FOMC meeting. You have the Fed speaking just about every day the following week. So they're going to kind of reiterate what they discussed at the FOMC meeting and where they see things going. Now, a lot of it is about the banks, right? And they had to provide a lot of liquidity. Their balance sheet went up a ton. And it went to help shore up that confidence in the banking industry, so that customers like me and you are not going to our bank and taking all our money out, because that would be devastating for the banks and the financial system. So they have to make that big confidence moving thing. And that's what they did with, giving the banks so much money. It's a bailout. I know that they say it's not. It's definitely a bailout. But anyway, so that's that. And this week, like I said, we have a lot of Fed governors, and we also have on Friday the PCE, right? So this is an inflation gauge. That's a big one. That's something that the Fed really looks at. It is their favorite gauge as far as determining inflation, and that's where they get, you hear a lot that they want to bring inflation down to 2%. That's that core PCE number, and that's what they're going to be looking at. So core PCE year over year, still expecting 4.7%. It's still way higher than where they want to get it to. All right, they want to get it to 2%. How do you get it to 2% without causing a recession? And that's what everybody's talking about with a soft landing, right? I don't see how that's possible. All right, that's just my opinion. I don't know, but I do think eventually this is going to start to affect stocks. It's going to start to affect earnings, and that will in turn, cause a recession. So far, everything is okay, but a lot of times when the Fed has to raise rates so fast, so quickly, and by so much, the odds of them breaking stuff is a lot higher. And that's what we're seeing with the banks. And that's just the first kind of steps to happen. We haven't seen the labor market yet really get hurt. And I think that's going to happen as well. But we haven't seen it yet. So we're just going to sit and wait and do some research. And that's what we do. So going over to the bond yields, and this is something we were talking about, this right here. So this yellow line, this is our QQQ, right? This is the NASDAQ. So you can see here, the NASDAQ outperforms when the bond yields, especially on the 10-year, goes down. You can see, it's very clear here how much of a difference it is, right? Right when those start to diverge, right here, when the yields go down, the NASDAQ goes up. All right, so that's why we are constantly looking at the bond yields and how they're trading. All right, it is also when the 10-year does go down so much, that's also suggesting that a recession is coming, right? All right, so that's the bond yields. Going over to our favorite thing, our compass. That's the SPY. This is the S&P 500 ETF. So that's just tracking the 500 top companies. And that's why I like to look at this as a gauge for the overall market. All right, what we've seen since the lows in October, we have seen that bearish to bullish reversal, right? And all that means is it's starting to make higher highs and higher lows, higher high, higher low, and we're starting to bounce up. Now, the only problem is right here, you have this downtrend line and it's acting as resistance. You also have the point of control right here, big volume ledge to get through. You also have that 50-day moving average just above as well. Now, the market has basically been trading in the same spot as it has been basically for the entire year, right? Right around that 4,000 mark on the S&P 500, right around this 390 to 400. This has been where a lot of that volume has taken place, and you can tell right here, okay? Now, if we can break above all this, I can see us going to possibly this area right here, this volume ledge right here for the past year. And that's just this cluster here, couldn't get above it. Right back here, couldn't get above it. Kind of hit over here and came down. Same thing over here, hit it, came down. Seems like a nice supply zone. All right. So if we can break above, I think it's going to be pretty tough to break out of this area. All right. So maybe we get back to it. Maybe there's a double top on the year. I don't know. But if we can break out of this, that's probably where we're going to fill this gap here until this next volume ledge. And if not, we can sell off, right? So there is that a lot of overhead resistance coming up. And then the possibility of hitting this trend line again and coming back down. But so far, the move has been higher highs and higher lows. Okay. So just keep that in mind. This is kind of the trend we're trading, but it has been a very difficult year to trade. All right. So that's the SPY. Going over to the Qs on the 1 year, right? So this is the 1 year, the last year of trading, and this is the volume for the past year. You can see a ton of volume has taken place below where we are right now. That is very bullish. When you have all the volume for the past year, this is kind of acting as that support, right? So you got a lot of support down here where people were buying, right? There was also selling, a lot of selling, but people were also buying here. And when things do pull back, they look to add to those positions. But right now, this is what I see. So I see very clearly that this area is going to be difficult, right? Every time we've been there, we've sold off. Right here, we came back down. These candles look very, very bearish, right? These topping tails. And now we're coming right back into it. But there also has been a lot of support, right? And this is the Qs. So I just want to show you guys really quick. This is our Discord group, and I'll leave that link down below. But on Friday, these are levels we post every morning before the market opens. So we had 307 and we had 310.89. All right, this is posted, like I said, before the market opened. So if we go back over here, the Qs on Friday, remember, I put those before the market opened. You see here, 307, hit it basically to the penny, and that was support. We closed at 310.89, my exact level. All right, so these levels and knowing how to do the levels are very important in trading, and we do post those every morning. All right, so that's the Qs, and we did see that right now we are coming into what is going to be a tough spot. Now, obviously, there's less volume here for the year, so there's a possibility that it can slice through. But if we look at this on 3 years, we can see that, yes, there is a lot more volume up here. It's not all just below, okay? So keep that in mind. The last 3 years have been pretty wild in the market, and a lot of people did buy up here that are going to be very happy when their stocks come back. And if they do come back, they might look to sell, all right? So keep that in mind. The last 3 years, there is a lot of overhead supply. But in just the last year, a lot of that buying and selling has happened below price, all right? So that's the Qs. Okay, so now coming over to the Dow Jones, that's the DIA. This is where, some of those value stocks will be found, as well as the IWM, which I'll go over in a second. This is not looking too good, right? This chart does not look great. When you're trading under the 200, under the 20 EMA, and under the 50, that's pretty bearish, okay? This will continue to be bearish for as long as they think a recession is going to happen. And we have seen, like I said, a lot of portfolios are starting to move money from those value stocks to those tech stocks. It's called a trade, right? This is a trade. It doesn't mean it has to last forever. And I think once earnings start to get really bad, I don't think that's into the market yet. So I do think the market has a lot of room to the downside. And when people are thinking, okay, the Fed is going to pause and not raise rates anymore, that's going to start to be a very negative thing for the market. People right now are thinking that's a very positive thing. But for them to pause, that means that the economy is not looking so good. And that's going to start to translate into the actual market and price into the actual market. That is not the case yet. So I do think there's more downside to come. All right, the IWM has gotten back on Friday to this level. So that's good for the IWM. This one, if it can continue, has room to go up because this has gotten beaten down so much as of late. All right, so that's the IWM there. All right, now the VIX has had support at the $20 mark here. We've seen those spikes up here when volatility gets crazy, and now it's come back down. And you can see here, it closed at 2174. It's still an elevated level, of volatility, of fear, but it's not crazy. It's nothing like what we've seen back here before. All right. Can we get there? Maybe. But this is all because of the banking sector. We saw, a lot of fear, but we're coming back down now. So the VIX is not scaring me at the moment. But a lot of stocks are really looking overbought. All right. That's NVIDIA. I mean, this stock has been really, really nice and very nice to see. But are you going to be buying up here right now? With the RSI so overbought? Not sure. I mean, it's way over its 200, way over the 50. If it does pull back, you'll see this momentum indicator here. This is the 20 EMA. If it does pull back, you could get a pullback to around that 20 EMA. So that's what I would be looking at as far as NVIDIA goes. If the Qs don't break out, right? Because you always have to look at the overall market, and that is a good indication of where stocks will go because most stocks follow the SPY and the Qs. So keep that in mind. So that's NVIDIA, AMD, another chips maker. I mean, just a great looking chart, but overbought. We're overbought right now. So keep that in mind. That's NVIDIA. Looking strong. Microsoft also looking strong. Coming into definitely resistance here. So it closed right at resistance. All right. Overbought RSI. A lot of these are overbought. Netflix. Looking at Netflix, not overbought yet. This is in a nice uptrend on this trend line. If, and I say if because Netflix is looking really strong. I mean, this chart's looking really strong for that move back to 379 and possibly that 400. All right. That could be that next move higher. As you can see here, there's been a series of higher lows and higher highs. It's been a very nice trend. So that's what we see. If we could break that 50, then maybe we get that move back up at least to around this area right here. All right. So I wouldn't be shorting Netflix right now. I would be looking at, wow, that's a nice amount of volume coming in and, taking it from there. But I wouldn't be shorting this at the moment. If it got back to this area and we can set alerts, then I would be looking to take shorts. All right. So that's Netflix. And that's basically it. I'm not going to do any picks this week. I'm more interested in the overall market and where we might be going on the overall market. It's tough at this point to make any predictions on stocks when you have a very choppy market and a very range-bound market. All right. I don't like to play options in that, only at extremes, right? So extreme overbought, I would like to take puts. Extreme oversold, I would like to take calls. So that's basically what I'm going to be looking forward to doing. Hit the thumbs up, like I said, for the video, and thanks for watching. Take care, guys.